For the average individual today, how should he be allocated, let's say, geographically and by asset class?
Well, it's tough. It depends on your time horizon, your risk preference, how old you are. But I think Americans are probably overinvested in the U.S., even though I happen to like U.S. equities right now. And if you look at the flows, it would suggest that Americans are becoming too addicted to fixed income investing at very low returns. And I think there are some dangers down that road. So I think people have to look at their asset allocation mix. I think they should look beyond the United States. The world is becoming more global. And I think they ought to look beyond fixed income because, A, there is downside risk to fixed income, and B, you can get totally lopsided and ignore what's happening in commodities or equities. So I would say relook at that. And I think people can drift and not realize how imbalanced they could be.
Yeah. Wally, what do you think?
Well, when you're talking about individual investors, I think they get tugged in many different directions that many of which they don't understand. And I think they should either delegate that whole decision to somebody they really trust, and that may be hard to find for them. Or to stick to some corner of the world that they really feel comfortable with. And I wouldn't say that the only good investments are in America just because I happen to buy American stocks. But I do agree with the comment about bonds that all the flows we see are into our bond funds, and we, it's almost like over our protests, because there's really nothing very good that can happen from 0% interest rates.
Every financial expert I talk to, without exception, says individual investors are putting too much into bonds. And it all makes sense to me. The worry is, whenever everybody is agreed on something like this, it makes me nervous. Is this something where actually all the experts are absolutely right?
I agree with what Wally says about it could take a long time. This could be 66 to 82. So if that's the case, and if we look at inflation and deflation and look at supply and demand, what is there in excess of today? There's an excess of dollars, an excess of money. And so our view is that real rates are going to go negative around the world. That that we think you should definitely have an asset allocation to commodities and real assets, because that's the thing that is going to go up. There isn't debt against it, so all this liquidity coming in the market, for every buyer there has to be a seller. It can't go to zero. You don't have counterparty risk and you don't have fraud risk. What prudent investor wouldn't have some sort of allocation to commodities? Most retail has zero, and even institutions, overweight is 5 to 10%. So if that's the case, and you have inflation only coming in real interest rates, which could pressure margins, and we have this slow recovery, then interest rates could stay low for a very, very, very long time, and we could actually go to negative rates globally. We advocate getting in higher yield commodity-based bonds as we have a contraction, and maybe we have global interest rates hovering as an average between 3 and 5% instead of up around 7 to 10%.
Your views, Abe and Dave, on allocation generally?
I think this question of is it a bubble, not a bubble in treasuries, et cetera? It probably is a bubble, is my guess. But bubbles can last, to Renee's point, for a long time. But is it irrational? I mean, is it irrational for an aging population to seek income? Probably not. There's an element of I think rational behavior. The question I have is why isn't some of that dedicated to equities, which themselves pay income? There are many dividend-oriented securities in our portfolio yielding well over 3%. In some cases, these are companies that have triple M's of the world, where you have some pricing power, you have the ability to potentially have an inflation-protected security at the same time with a much higher yield than your tips out there. So I think the balance of the flow may need to should shift more towards equities, particularly dividend-paying equities from just fixed income. But whether it's irrational or not to actually pursue income for an aging demographic, I'd take question.
Not necessarily.
Take issue with that. Yeah.
But I think this whole idea of asset allocation is just overrated. People, their primary asset is themselves and their job, and maybe their family and a lot of other. It's not the market. very few people get rich investing in stocks. We happen to be in the business where we do it, but the average guy is not saying, oh, geez, I bought a stock and I made $1 million and now I can retire. It doesn't work that way because most people don't. And so this idea that I'm going to allocate out of bonds into stocks and I'm going to get rich, forget about it. Get back to work, try to get a raise, try to get a bonus, try to better yourself, go to school. You're going to get rich with your job, not with the market.